Hello everyone and welcome to the show. This is your Business Morning. Let's get the show started. I am boasting of your brand new Business and Markets Week starts right now here on the channel. First, today's story, let's get this right out of the way. The Federal Inland Revenue Service today issues a notice of final demand to companies whose bank accounts are under lien to regularize their tax status within 30 days of today's notice. The FRS says it will enforce the payment of outstanding tax against all the directors, the managers, secretaries, and every other person concerned in the management of the companies without further notice. So the FRS says if you're owing the tax authorities and your bank account is already under lien, if you fail to pay within 30 days, all the directors and managers, everyone involved in the management will be debited with the tax outstanding to the federal government. Meantime, the Nigerian government says there was no ban on food imports, but there will be restrictions placed on the use of official foreign exchange market to source import bills for food. The Central Bank Chief, Godwin Emefiele, we understand, just finished off his press briefing in Abuja right now, where he clarified to the media what President Buhari says last Tuesday regarding the directive on food imports foreign exchange ban, which he says the Central Bank should move ahead and implement. We'll give you that soundbite as soon as it gets here. But the Central Bank Chief has just spoken for the first time on the subject. Meantime, we're expecting Nigeria's capital importation and foreign trade in goods data for the second quarter of this year from Statistics Office this week. That will be coming through between tomorrow and the end of the week. Keep that in mind. That will give you an idea of the inflows and outflows of foreign exchange as well as import and export, what we did in the second half of the year. So what do we have this week? The new ministers are expected to get their performance indices documents today from President Buhari as they start their presidential retreat in Abuja. We will be live on that event here on Channels Television. Keep that at the back of your mind. Meantime, the first round of crude fuel contracts under the new Mele Kyari's administration at the NNPC has been held. 35 oil firms are qualified under 15 groupings. They've been awarded the 2019-2020 deal. According to the NNPC, the 15 consortia shall provide offtake crude oil and, in return, deliver corresponding products of equivalent value to the NNPC, subject to the terms of the agreement. Meantime, the new NNPC chief, Mele Kyari, on July 8, if you remember, says he will open all corporations' books to public scrutiny because he wants to run the NNPC as a publicly owned company, and that Nigeria needs to know what the company's operations is all about. We expect to get an analyst to speak to the transparency in the NNPC within the show. Meantime, listed oil trader Corner PLC says the company last year managed the challenges properly as it embarked on strategic cost reduction and ensuring future growth potential. So what are the numbers? If you're just getting it through, this is the Corner reporting a revenue growth of 5.8% to 122.2 billion naira. Pre-tax profit went up 11.4%, and net profit for the full year 2018 ended 13.8% better at 1.7 billion. The shareholders are getting 200 kobo per share as cash dividend for the year ended. And so we ended the market on Friday with the governor of Ekiti State, Dr. Kayode Fayemi, briefing the market about the state of the state's economy. This was how the closing bell actually went when Fayemi met the market.
Really wonderful to be back here. It's not my first time to ring the bell here. I was there when we raised our initial 25 billion bond capital in my first time in office. I was also here as mines minister, as some may recall, a couple of years back. I'm back here now to make a case for why Ekiti is a destination of choice and why you really should be putting your money on the Ekiti case. Once again, I look forward to you joining us on the 20th floor, as the CEO has said, so that I can make a stronger case than the 3 minutes would allow me to do now.
Ekiti State Governor Dr. Kayode Fayemi's closing gong. Temple Ashaju, business correspondent, was there on Friday with the closing bell by the Ekiti State Governor. Temple, good morning. Welcome to the show.
Good morning, Bosun.
Yeah, great to see you. Thank you, Temple. I'm sure you have quite some time on your hand this morning for some conversations around the earnings, but that was the Ekiti State Governor. What did you make of his closing bell and his presentation? Just 1 minute before you give us a recap of the market data for the week we finished.
I think it's good to know that Ekiti State has now become the first state government to actually make a fact behind the economic session here at the Nigerian Stock Exchange, selling his state rather to the broker-dealer community, telling them that it is possible for them to come up with a public offering eventually to list some of the state-owned companies that they have actually been able to float and regenerate with the kind of bonds that they raised between 2011 and then was redeemed last year, 2018. So it's something to Ekiti State government is a major space to watch going forward. There's going to be investment in tourism, in education, and an education economic zone eventually, as the governor puts it.
Very interesting. We'll keep an eye on Ekiti State, and you know, he promised and he says he's going to roll out a plan of those private, those projects that he wants the private sector and the market to support his funding. That's one outlook we have on our radar for Dr. Fayemi and his Ekiti State and all of that. But Temple, give us, despite all of this, when we finished off on Friday, the market went 1.4% underwater. We lost 27,000. We were clutching to that for a couple of weeks now. We finally lost that by the time we finished off on Friday.
Correct, Bosun. We lost a whopping 185.9 billion naira last week in the equities market, as of course the threats of the trade wars between U.S. and China continues to rattle markets globally. And of course, domestically here, we have a couple of policies that is beginning to send out some foreign portfolio investors from the market. That amounts to risk of sentiments. Last week alone, we had 10.459 billion naira worth of transactions in the market. That's huge. And of course, that's responsible for the greater part of the sell side of the market was responsible for that particular figure. 12,915 deals was what we did in a whopping 726 million units plus of shares that was traded in the market. If you go by the sectoral performance, look at the numbers, all of the major sectors were down except for MTN, which is a subsector in the markets. MTN was up more than 2%, but if you look at the banking space, FBN Holdings, Stanbic IBTC, Ecobank Transnational Incorporated, all of these major companies in the banking space were down. Consumer goods was not spared. Nestle on Friday alone lost more than 10%. That's negative. WAPCO was also down. Insurance segment of the market, in spite of some kind of positives we've seen around that segment, was also down. Oil and gas was negative all the way. If you look at the unlisted securities market, it was down as well, marginally lower by some 0.04%. We got a USI at 716.76. The gains we've seen around the market capitalization has been tail spinning in recent time, and last week it settled week on week at 514 billion naira, and in total was just 31 transactions. For the fixed income space, we saw average fixed income yields last week higher by some 54 basis points week on week to some 13.66%. If you look at bond space, we got just 32 number of deals. on Friday specifically, and that's worth about 20 billion naira, but they didn't touch that particular figure. If you look at sentiment, it was really bearish on the bond space. On average, yield was up 50 basis points to 14.33% due to some sell pressure we had around the short end of the curve, and that's specifically on the February 2020 security. For the treasury bill space, in spite of the resumption of the CBN on OMO auctions and T-bills auctions, average yields at the secondary side of the markets was up 55 basis points week on week to 13%, and sell-off was what we saw in specific time on the 182-day to maturity security, which was down week to week on week by 203 basis points. But specifically on Friday, 383 deals was what we had at some over 200 billion naira, Bosun.
Okay, Tempo, thank you for giving us the brass tacks, as it were, trying to run us through the market. Again, it's a very depressing time still on the equity side of the financial market. So let's get you and to give us a bit more enlightenment into that, or as to what really happened, then choose some of the earnings that we have. Perhaps this will give the market a bit of a fillip this week. Look at the banking sector, 1.15% in the week, just as we had GT Bank numbers. It doesn't look like the bank's earnings are coming through any surprisingly big, as it were. But then, again, we keep our fingers crossed. I also had corn oil late on Saturday, just as the market closed for the week.
Yeah. Sure, Bosun, and that's how we got on the show this morning. Adedayo Bakari, an analyst from Afra Invest. Thanks a great deal for joining us. So quickly, let's get your insight into, what is actually rattling the markets. Last week, as we saw, equities was down, as Bosun put it. I mean, we also saw the fixed income side of the market not speared. Basically, the markets are tanking.
Yeah, markets are tanking, and funny enough, it's not only in Nigeria. Almost, last week, across most of the, major indices across the world, we saw a very bad performance, even, in emerging markets like Nigeria. Now, to the market, the local market, last week was also bad, and continues, the run of losses we've seen in the market. For us, we believe that, there are so many issues around, why the stock market is not doing well. One is slow growth in earnings. So earnings are not rising as fast as investors would like to see.
Yeah.
And that is generally because, the broader economy is not doing too well. Growth is improving, but very, very slow, right? So also in terms of when you think, in terms of thinking about the future, what is the plan for the next 4 years? What are the reforms coming on stream, given, weak investment in infrastructure, weak investment in social services, weak investment in education and in health, and also when you balance that with government's fiscal position, which is currently bad. So investors are looking at all these issues, and they're looking for a response, from the government, and we're yet to see that so far. And we believe that is another factor why investors are playing it safe. Rather than playing equities, they prefer to go into, fixed income markets.
But even in the fixed income side, we've been seeing a lot of exits of the foreign portfolio investors in recent times.
Absolutely. Now that again too is connected to what is happening across the world, because the Nigerian market is not immune to what is happening across the world. One, we know the trade war between the US and China and other major countries is actually affecting the global economic performance, and because of that, some investors are going into safer haven, pulling back their funds in emerging and frontier markets and going into say safer haven in the US. So that is partly responsible. Another factor is that if you look at the markets, yields were high, for instance, in the first quarter of the year, and you discover that yields have gradually moderated, and that is because the CBN has been easing. So OMO auctions have not been aggressive as we used to see initially. So due to robust system liquidity, you find that rates have generally trended downwards, and that has affected also investor participation in the fixed income.
I'm talking about the federal government's response to the whole policy direction that investors wants to know. I mean, today we know that President Muhammadu Buhari will actually be inaugurating his cabinet, but that will form part of our outlook, whether that will impact on the markets eventually or not. But however, let's look at some of the events that actually shaped the market the last week. I mean, gross earnings of GT Bank, going by the numbers posted, was really, really down by 2% plus or thereabouts in the market. But we saw some kind of improved profitability. Give us a sense of what is responsible for that kind of performance.
Okay, GT's numbers, I think they were in line with our expectations.
Okay.
Because, generally, connected to what I said earlier, yields have generally trended downwards in the market, and so because of that, you saw interest income decline by around 8%, right? Once you see a decline in interest income, which is the major part of their earnings, even though there was a faster rise of around 12% in non-interest income, that was not enough to offset the weakness in interest income. So that was actually what drove the marginal reduction in gross earnings. But still, the bank, as you know, GT Bank is a very efficient bank, and they were able to still stay, to grow profit, and that was because of three main factors. One, interest expense reduced significantly
by 25%.
Exactly, that was significant. So that supported, the net interest income. Also, you find that operating expenses was contained. So growth year on year was just around 0.45%. So that was very, very weak. And also when you think in terms of the impairments was also relatively contained at 2.2 billion from 2 billion in the same period of last year. And all these factors put together, supported an expansion of 5% in the profit before tax and profit after tax. They did around 3.7% growth. So overall, it's really when you think in terms of GT Bank, it's about the cost efficiency of the bank that continues to help its sustain operations, even if the broader macroeconomic environment is unsupportive of the major earnings.
Okay, so that's how they were able to also mitigate the effects that they would have had on their earnings from a weaker income from loans and investment securities where they had a lot of losses. Okay, but we know that this same bank actually had a lower LDR, in Q1. What were they able to do this differently this time to hit, I think, 61% or thereabouts? And are they really likely to meet the September deadline targets?
The target in September is 60%. The bank
already surpassed it now.
They're not actually doing very, very well in that regard. And that was because when you look at the numbers, between H1 2019 and H1 2018, you saw that the increase in loans and advances was just around 1%. Meanwhile, deposits grew faster, at 8%. So by September, obviously, we are starting to see banks ramp up, credit extension to the real economy, consumer credit, and all sorts of, credit. So we see that, playing out. We see an improvement, at least in the third quarter, to meet the deadline of the CBN. And we believe also, depending on the progress made before the deadline, you might see some kind of
kinds of improvement. I mean, they're declining 30 kobo as interim dividend. Perhaps that would be a major catalyst for them. But in 10 seconds, do you have any forward guidance for this week and by way of outlook for the markets?
Yeah, absolutely. The release of the cabinet, especially the announcement of portfolios, I think it's going to a bit shape investor sentiment on what to expect, and we could see trading on the basis of that this week.
And of course, capital importation numbers will be released very soon, so we'll know where we have some vacuum. Yeah. Anyways, thank you for your time. Adedayo Bakare, analyst with Afri-Invest. I appreciate it. Boston, it's back to you.
Yes, Temple, quite a lot to talk about this week. We just got news of the central bank chief concluding his press briefing in Abuja right now on the President Buhari's statement last Tuesday. Statement credited to him about Nigeria's restricting foreign exchange, official foreign exchange sourcing for food imports. We're getting that to our viewers here and around the world in the next couple of minutes as soon as we bring it down here. But the Central Bank Governor has spoken for the first time on President Buhari's statement last Tuesday. This is the first of such official statement. As Temple mentioned, we're expecting our second quarter capital importation report tomorrow, and later in the week, foreign trade in goods report for second quarter. These are two critical economic data for the second half of the second quarter of the year you need to have. We'll take a break.